Understanding market penetration, key concepts, strategies, and impacts. Market penetration is a crucial metric used in business to gauge the extent to which a product or service is embraced by its target customers in comparison to the total estimated market size for that product or service. It provides insights into a company's market share and potential for growth, helping organizations form effective strategies to increase their presence in the marketplace. Key takeaways. Market penetration definition refers to how much a product is used by customers compared to the total market for that product. Comparative measure, it evaluates the percentage of potential customers that have chosen a company's product over a competitor's. Market development, strategies to enhance market share can involve multiple areas including pricing adjustments, market expansion, and product introduction. Importance of market penetration. Understanding market penetration is vital for several reasons. 1. Market assessment. It helps companies evaluate the size of their potential market. For example, if a total of 300 million people live in a country and 65 million own cell phones, the market penetration would be approximately 22%. This implies that there is a significant segment of the population, 78%, that remains untapped. 2. Growth potential. High market penetration rates can indicate saturation in an industry, meaning fewer opportunities for market growth. Conversely, a low rate can highlight the potential for increasing sales and reaching new customers. 3. Performance comparison. Companies can compare their market penetration against competitors, enabling them to identify strengths and weaknesses in their marketing and product strategies. Calculating market penetration rate. To determine the market penetration rate, the formula is straightforward. Market penetration rate calculation. Markdown. Market penetration rate equals number of customers / total target market size, x 100. Where number of customers, unique customers who have purchased the product. Total target market size, TTMS, all potential customers available for that product. Alternatively, a financial approach can also be adopted. Sales-based calculation. Markdown. Market penetration rate equals total sales dollars / total target market sales potential, x 100. This second method is particularly relevant for industries where sales value can be a more indicative measure of success than customer numbers. Market penetration strategies. Various strategies can be employed to increase market penetration, including 1. Price adjustments. Lowering prices can attract more customers, and while increasing prices may work for luxury goods, Veblen goods, it often weakens market share in other categories. 2. Product innovation. Developing new products or improving current offerings can appeal to unmet customer needs. 3. Geographical expansion. Utilizing e-commerce or expanding physical locations can expose businesses to a larger customer base. 4th, partnerships and collaborations. Forming strategic partnerships allows access to different markets, as evidenced by collaborations such as Barnes & Noble and Starbucks. 5. Targeting promotions. Temporary discounts can capture new customers, although it's crucial to ensure these customers align with long-term strategies. 6. Sales force investment. Enhancing the effectiveness of sales representatives ensures improved communication of product benefits to consumers. Advantages of market penetration. Increased sales volume. Higher market penetration typically correlates with improved sales and market visibility. Enhanced brand recognition. A deeper market presence leads to increased brand equity, as consumers become familiar with the product offerings. Greater pricing power. A strong market position allows firms to set favorable terms for their products. Disadvantages of market penetration. Brand dilution. Rapid expansion or attracting the wrong customers can tarnish brand integrity. Operational stress. Market penetration demands aligned strategies across all departments, else it may lead to operational hiccups. Market confusion. Consumers might become confused about product variations and brand identity if not managed correctly. Case study, Apple Inc. As of early 2024, Apple has a 17% market share in the smartphone market, trailing Samsung's 20%. By consistently innovating and releasing updated products like the iPhone, Apple maintains robust customer loyalty. The company is poised to further increase its market penetration by targeting competitor customers primarily through marketing and product differentiation. Conclusion: market penetration is an essential measurement that reflects a product's utilization in its target market. Companies can utilize various strategies such as pricing changes and innovative marketing approaches to enhance their penetration rates, ultimately driving growth and revenue. However, careful consideration is vital to ensure that these strategies align with the company's long-term vision and maintain its brand integrity. Understanding market penetration lays the foundation for informed business decisions, propelling companies toward market leadership. In summary, market penetration not only serves as an impactful measure of success but as a guide for future business strategies.